Support and resistance does not work. It doesn't work because you're drawing too many random lines on the chart that you probably can't even see price action on how to properly find support and resistance levels. I'm gonna give you guys some real-time examples on the chart so that you can finally draw them correctly. At NQ here, we've got an absolutely beautiful upward trend line. But here is the deal, trader. I mark up my support and resistance to identify the consolidation to then wait for additional confirmation. And I'll show you what I mean. But essentially, yes, amazing. If I get a trend line break, cool. But like, how confident am I that if NQ breaks this downward trend line, how confident am I that it's not going to just continue to go sideways? How confident am I that it's not going to just move sideways through the trend line? Like, how confident am I that it's going to break and fall? And that is where double confirmation comes into play. When I mark up the ceilings and the floors, or the support and resistance, and wait for both of those things to be broken. So now not only am I waiting for the trend line to get broken, but I'm also waiting for support and resistance to be broken. So if I wait for both of those things, it's double confirmation. Helps me feel much more confident about my position. But now, how do we mark it up? Where would we mark up our support and resistance here on NQ as close to real-time price action as possible to help us in this next possible trade opportunity? So let's go back. Now, for support, that is essentially like a floor. Think of it like if we were to draw a floor on NQ using our two guidelines, where would we draw our horizontal line here? Or our resistance. So we're trying to get it as close to real-time price action as possible, which would be right here at 25,760.50. As close to that as possible while also maintaining as many touch points as possible. So I'm going to use the crosshairs on my chart to help me identify some sideways movement. And I'm looking at my eyes gravitating towards, and I'm gonna zoom out just a little bit to see if I can capture any more touch points than that. Pretty clear, obvious floor here. So I'm gonna go for the 25,607. This has got an incredible amount of touch points now from either side, which is fine. It acts as a floor compared to real-time price action because price is above it. But in the past, you can see over to the left, it's acted as a ceiling. So it was at one point support and resistance. So where we're going to draw this line now, based on where price action is at, it would act as support. So I'm going to draw my horizontal line here at 25,593.75. Or close enough. 25,602. So you see many touch points here. Touch point, touch point, touch point, touch point, touch point. Now what is a touch point? A touch point is essentially where the price reacts to this level, essentially this key level, and then reverses. Like it acts as a magnet, it gravitates towards it and then rejects it. But it's just essentially, it's a ceiling or a floor depending on if we're marking up support and resistance. So support will be your floor. So think of it like a bouncy ball. If you bounce a bouncy ball on the floor, it's gonna come back, but it will hit the floor first. So same here, price action will hit the level first and then come back up. Hit the level, then come back up, which is done many times over here as close to real-time price action as possible. Hit, turned around, hit, turned around, hit, turned around, and now here we're getting close to it again. Is it gonna hit and turn around again? So we have marked up our support. Now let's mark up our resistance. Same concept. We want to get as close to real-time price action as possible, but while also maintaining the most amount of touch points. Now, what I can do is I can mark up this 26,104.75. That gives me about 1, 2, 3, 4, 5, 6, 7, 8 touch points here. I'd say that's fairly significant. But what I could also do is if I really want to get as close to real-time price action as possible, I could draw this line here at 26,007. Now I don't get as many touch points. I still get 1, 2, 3, 4, 5 touch points here. So not as many as one of the others. So this is the subjective part where both levels would be fair, would be accurate. What else could influence your decision here is if maybe you're trading on a lower time frame. So we're looking at a 4-hour time frame here. A trader who's on the 1-hour time frame might be much more inclined to draw their line at 26,007 versus the higher level because it gets them closer to real-time price action. That higher level might not be as relevant for them. Or even, I mean, let's talk about it like a 5-minute trader. A 5-minute trader is absolutely not gonna use this higher level here because it's not as relevant. Price might not even get anywhere near to that level within the next few days or even weeks. But for 4-hour traders, it's much more likely because we're in that higher time frames. Resistance, which I'm gonna go ahead and draw now. I'm gonna opt for the one as close to real-time price action as possible. So we've got this level here at 25,998-ish. Now I do like to use 4 pixels when drawing my horizontal lines because that just allows a little bit more room. I can kind of manipulate the line a little bit more and grab more touch points. But we've got, I'd say, touch point here, touch point here, touch point here, here, and then 2 over here. So this right here is our consolidation based on real-time price action, getting us as close to real-time price action as possible. So now how does that come into play with the trend line strategy? How does that come into play with my strategy? Well, we always need a trend line in either direction. We need a bullish and bearish trend line to start. All right, so we have got our bullish and bearish trend lines, and we have just marked up our support and resistance together. We have identified the recent consolidation together. Now what do? Now we make sure we've got alerts set on every single one of these lines, on our support, resistance, and bullish and bearish trend lines. Now, when we get a break of one of these trend lines, what we want to also see in addition is a break of the support and resistance. If we can get both of those, if we can get double confirmation, we are going to feel so much more confident that this position is actually going to take a direction instead of just continue to move sideways through the trend line. Let's say, for example, I do not want to hold my trade for, 4 weeks, 3 weeks, 2 weeks. So I want to find somewhere closer to close my trade without having to wait for price to trend along this trend line that I don't know how long I'm going to be in this for. Crude oil was actually a great example. We're going into crude oil here. All right, so this is my chart markup for crude on a 4-hour time frame. Let's say that you got the break of this downward 2 touch point trend line. Now, same scenario here for marking up support and resistance for take profits. We're trying to keep it as close to real-time price action as possible while also maintaining as many touch points as possible. Now, this is going to be different for every time frame that you're in. If you are in a 5-minute time frame on crude oil, you're not going to have support and resistance levels at the same levels that I have in the 4-hour time frame, because you want that support and resistance level to be as close to real-time price action as possible while also maintaining as many touch points. Now, let's say that you were in a long position in crude because you got the break of this downward trend line. This is almost, we're going to call this like an A- setup. No, it doesn't have 3 touch points. I don't even think it's got a week's worth of data, but incredibly low risk scenario here. This is like a why not trade. If this trade doesn't work out, you're taking minimal loss here. So let's say that you're in a long position here based on the break of a downward 2 touch point trend line, but you don't want to hold this trade for an unknown amount of time. You don't want to hold this trade for potentially, which it's already been following along since. We've got Thursday all the way to Friday and now to Sunday. So Thursday to Sunday here. Let's say that you don't want to hold this trade for that long. Or let's say that you want to close before the weekend, which totally valid reason to want to just look for a sooner take profit or simply just look for a take profit in general. So what I did when I marked up this resistance here was I kept it as close to real-time price action as possible. And I tried to capture as many touch points. We've got 1, 2, close enough here, 2, 3, 4, 5, and then this was the 6th one. This is the 6th one that would have hit your take profit and closed your trade out in profit here. So you were able to close sooner and you were able to actually go ahead and close your trade before the weekend. So this is an example of looking for somewhere sooner to close your trade instead of waiting for the safety line to get crossed or the opposing trend line to get crossed, which would have been here. And then as price moved steeper in our favor, here. Now I know the colors are kind of wrong. Let me change the colors here. Now, how would this work in a short position? So let's say that we're going to go ahead and utilize real-time price action now. Let's adjust our lines and let's make everything relevant to where price is at now and preparing ourselves to take a position.